Hello, and you're welcome to Global Business Insights, where we keep you up to date on the main business headlines across the globe. The Dow Jones inched up 0.9% at close of trading yesterday. S&P 500 was up 0.9% as well, while the Nasdaq also up 1.5% ahead of today's US jobs report. And that was just before we got Apple's earnings, and after an FOMC meeting perceived to have been less hawkish than initially feared. Apple shares climbed in extended trading yesterday after it reported Q1 earnings that topped estimates and announced an expanded stock buyback program. Apple shares were down 10% year to date before the earnings announcement, which was came as a relief to most investors. 75% of S&P 500 companies have reported first quarter results so far, and 77% have actually beaten their earnings estimates. Yesterday, Goldman Sachs informed staff in its London office that it will remove caps on banker bonuses, becoming the first major bank to take advantage of changes to UK pay rules. The move is expected to be copied by rivals as the war for talent heats up across many sectors of the economy. In a statement, Goldman said this approach gives greater flexibility to manage costs through its pay-for-performance model and brings the UK closer to the practice in other global financial centers. We got Nigeria's PMI data, Purchasing Managers Index, yesterday for April, showing it slightly improved to 51.1 from 51 in the previous month of March. Also in Nigeria, it was reported that we could get an approval of ExxonMobil's asset sale to Seplat Energy soon. The $1.28 billion sale in Africa's largest oil exporter has awaited regulatory approval since 2022. Still in Nigeria, a court has adjourned a money laundering trial against cryptocurrency exchange Binance and two of its executives to May 17, after a lawyer for the exchange said he's yet to be served with documents required to prepare for the case. Also in Nigeria, the Nigeria Deposit Insurance Corporation yesterday announced increase in the maximum deposit insurance coverage levels for all licensed deposit-taking financial institutions with immediate effect. Managing Director, Chief Executive of the NDIC, Mr. Bello Hassan, at a media briefing in Abuja yesterday said the maximum deposit insurance coverage for deposit money banks had been increased from 500,000 to 5 million naira to improve coverage. And in South Africa, manufacturing activity improved remarkably in April. A Purchasing Managers Index survey showed yesterday, helped by fewer power cuts last month. The seasonally adjusted PMI rose to 54.0 points in April from 49.2 in March, also near a 2-year hike. And exercise bike maker Peloton Chief Executive Barry McCarthy steps down from his role as he launches a restructuring plan that will cut 15% of its workforce. Later today, we will get the US non-farm payrolls data for April, where it is expected that 210 to 240,000 jobs were added after 303,000 jobs were added in March. The unemployment rate also expected to hold steady at 3.8%. Apple's results outperformed expectations, and it was backed up with a huge share stock repurchase program of $110 billion, yet another sign of confidence. In Q1, Apple posted revenues of $90.8 billion, down 4% from a year ago, but still slightly above expectation of $90.5 billion. Earnings at $1.53 a share also beat expectations of $1.51. iPhone sales, however, dropped 10%, but Apple says that was because of an unusual boost in the previous year after COVID-related disruption. So if you adjust for that, they would have seen a year-on-year increase in the first quarter. Other details on performance: iPhone revenue at 45.96 billion, missed 46 billion estimated, while Macs beat at $7.5 billion. iPad revenues at $5.6 billion was less than $5.91 billion estimated. Wearables, home and accessories revenue were $7.9 billion, down 9.6%, very much in line with consensus. Notably, services, which includes the App Store, Apple TV, and Apple Pay, grew 14%, with revenue at $23.9 billion, beating $23.27 billion expected. Other takeaways: Apple increased its quarterly dividend to 25 cents from 24 cents and expanded its stock repurchase program by $110 billion. There was no specific guidance, but CEO Tim Cook had told media that overall sales would grow in the low single digits in Q2. Apple is responding also to an increasingly heated competitive environment in China, where revenues are falling, also facing a possible backlash after the US passed a law to compel ByteDance to sell TikTok's US operations or else be banned. Also, the US Justice Department is suing Apple for its anti-competitive stance to preserve its strong market position in smartphones, and its latest Vision Pro mixed reality headsets are not selling as well as many thought. On May 7, Apple will announce new iPads plus big AI-related plans that could revive demand. But in short, services remains the star business, growing impressively, but a business line also being attacked by regulators for competitive practices. China looks like a big question mark as Apple increasingly pivots to India as it expands its footprint in the faster growing Asian market. Apple is still seen as the laggard in the AI race, maybe running out of time to deliver another ground-breaking innovation like it did with the iPhone and the iPad. Perhaps it needs a different AI-infused gadget to set it apart from the pack. Nigeria headline PMIs, Purchasing Managers Index, ticked up to 51.1 in April from 51.0 in March, pointing to a slight overall improvement in business conditions in the Nigerian private sector. According to the release, private sector activity started the second quarter on a strong, albeit modest, footing as a slower rate of price increases supported the rise in the growth of new orders. Naira appreciation by 22.5% month-on-month in April also provided support for a slowdown in the pace of price increases. The good news from the PMI release is that headline inflation is close to its peak. Further rate hike at the next MPC will constrain household consumption and business investments, which means a moderation in the growth of interest rate sensitive sectors like the manufacturing, construction, real estate, and trade. According to the release, the economy will grow by 2.9% in 2024, which is a far cry from the government's target of 3.8% and IMF forecast of 3.3%, just revised up from 3.0%. That's after 2.9% growth in 2023. The IMF saw three main challenges for sub-Saharan Africa in its latest report, where it sees a tepid recovery. First is improving public finances without undermining development, monetary policy focused on ensuring price stability, and implementing structural reforms to diversify funding sources and economies. In Nigeria, the key blockers to growth are not easy to deal with: electric power outages, still rampant insecurity, record high inflationary pressures, and the massive infrastructure gaps. Analysts also point out that consumption is pivotal in Nigeria's GDP growth, driving growth. In 2023, private consumption, as estimated by the Economist Intelligence Unit, contributed about 65.2% to Nigeria's GDP. EVI in January, that's Emerging Value Insights in January, had projected a range of 3.2 to 3.7%. The PMI data out today suggests we are likely to get something in the lower end of that range, with potential to see better growth, especially if inflation drops as is expected from June, with improvements in consumption and if oil output continues to improve. Goldman Sachs says it has scrapped caps to bonuses. The UK government scrapped the cap on banker bonuses inherited from its period of EU membership. That was last October. The decision was to boost the City of London, although pay consultants have been skeptical that that will lead to a significant change in pay. Being able to attract talent is key to competitiveness, and the ban may have, to some extent, constrained ability to attract and keep star performers. But many human capital managers will say there are other ways to retain the people you want, including new complex financial structures, deferred compensation models, and an array of perks, which may have made bonus caps less relevant. Still, it was good news for especially bankers, and Goldman Sachs is formally telling its staff that the sky is the limit on what they can earn if they do achieve the near impossible targets that are set. In the US, markets are still coming to terms with the ban on non-compete clauses, which pay consultants also say are increasingly outdated, as there are other golden handcuffs in place to keep stars, and turnover may not significantly increase. The trend, however, continues to shift, with more power moving to increasingly hard to get and hard to retain talent. In closing, we look at Asian stocks, where Hong Kong and Taiwan stocks are leading gains ahead of the key US employment data we are getting later in the day. Shares of Asian Apple suppliers were boosted after Apple reported higher than expected earnings. Taiwan's semiconductor manufacturing company was up 1.8%, while Foxconn also jumped 2.6%. Looking at where we are on Asian stocks, Nikkei 225 down 0.1%, Hang Seng up 1.45%, Shanghai Composite down 0.26%, the Shenzhen Composite down 0.9%, South Korean Kospi also down 0.1%. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Please share, kindly follow on Facebook and LinkedIn, subscribe on YouTube and X. Thank you very much for watching.